Welcome to this class, Corporate Accounting. Now we are going to discuss about the problem taken from the chapter called Alteration of Share Capital. This is a problem taken from Aralgutta Radhaswamy, old edition. In this, we are given with a balance sheet and some scheme of internal reconstruction is also available. According to that scheme, we have to solve the problem. The scheme in the sense what? The scheme means what? It is only that indications for doing the alteration of shares, reduction of share price, that is the face value. That one is technically called as a scheme of reconstruction. We are given with that. Now take problem. This is balance sheet is given. Balance sheet of Now Bharat is available, and some adjustments are also given. The company suffered with heavy losses. This is the point. This is an important point. You please underline that point. Heavy losses in a sense. What is the purpose? This point that indicates the purpose of alteration of share capital. Because in the first class of this chapter, I told you alteration of capital, that internal reconstruction, you can go for the internal reconstruction or the alteration of capital if the company is facing the huge loss for adjusting that, and if the assets are wrongly valued, then for that purpose also you can go for alteration of capital. See here, it is specifically given that the company suffered heavy losses. The following reconstruction scheme was adopted. Shares be reduced, preference shares be reduced with equal number of fully paid equity shares of rupees 50. In the balance sheet, in the existing balance sheet, it was given as 100 rupees per share. Now it is reduced to 50 rupees. Equity shares be reduced to an equal number of shares of rupees 50 each. And for equity shares also, 5000 shares of rupees 100, it was given in the balance sheet. Whereas now we have to go for 50 rupees each as the face value we have to consider. So that is the capital reduction. The old rate compared with old rate and the new rate, the difference is taken as capital reduction. That you should keep in mind. And amount available be used to write off leasehold premises 30,800 and 15,000 on stock, 20% on machinery, sundry debtor, balance available. Please note that in previous problems we are straight away given with this item is written off, that item is written off. Whereas here, up to what extent we have to reduce that notified assets. Of course, we are all well aware that only that fictitious and intangible assets are written off. Here, up to what extent, what amount should be written off, that is also specified, that we have to keep in mind. Then, after doing all these things, we are required to prepare the journals, and as a result of that, we should prepare the balance sheet. Let us go for the problem. Actually, how to solve the problem. The first entry is preference share capital account debtor to new preference share capital and capital reduction. Debit preference share capital is with the balance sheet value 7,50,000, that is 7,500 at the rate of 100, and credit preference share capital is amount is reduced to equal number of fully paid shares of rupees 50 each. So 50 rupees only we have to take. So 7,500, the same number of shares are maintained, 7,500 into 50, that comes to 3,75,000. Balance is another 3,75,000 is capital reduction. And in case of equity shares, the shares are maintained like this, and the rate is reduced to 25 rupees. So 100 rupees share is now called as 25 rupees share. So we have to take 5,000 equity shares at the rate of 25 rupees each. That is the new share capital value. And the balance is a capital reduction. Now what is the amount of a capital reduction? 3,75,000 here. And in the first entry 3,75,000, that comes to 7,50,000. That total 7,50,000 is utilized for the notified assets given in the question. What are the assets normally we have to adjust? Discount on shares, preliminary expenses. If patents are given, that is also adjusted. In this case, what amount we have to adjust? That balance amount only we have to take it for patent, P&L account, leasehold premises, what amount we should adjust, that is given in the question, stock, machinery, debtors. These are the items we have to adjust. After passing this entry, now we have to prepare the balance sheet. Simple. Same assets and liabilities we have to take, and as far as that assets are concerned, patent, the existing value, it was 8,50,000. On that, some amount you have adjusted. Okay, some amount you have adjusted. So that balance amount is patents we have to take. Then leasehold property, either you call it as leasehold premises or leasehold property. Okay, existing value minus what amount we are adjusting as per the entry number 3. Then next item, machinery, in the same thing, what amount we have to adjust as per the condition given in the question and as per entry number 3. Then debtors, stock, for both the items we have to adjust the amount specified in the question. And balance is untouched item, cash in hand, that we have not adjusting anything with the cash. We have not paid anything with the cash. So that we are taking. Coming to the liability, then 7,500 shares. Now the new rate is 50 rupees. So 7,500 preference shares at the rate of rupees 50. That we have to take it in the liability side. And coming to the next share capital, 5,000 equity shares. Amount is reduced to 25 rupees. Actually 100 rupees share reduced to 25 rupees. That we are taking here. Then sundry creditors. The amount of sundry creditor given in the existing balance sheet 30,000. Straight away we are taking. Bank overdraft straight away we are taking from existing balance sheet. No adjustment is given for these two items. Now the balance sheet is tallied. So this is the very apt and frequently asked question for section C. The importance of this question is you can understand the concept of the topic and easily you can get the answer, easy to solve this problem, right? So similar type of problems frequently asked in the examination, so you practice related type of problems.